You criticize me for investing in Bitcoin. You own a big position in Microsoft. You own a 5% weighting in Yahoo. What is that? That's software. Why don't you do the same thing in Bitcoin? Why don't you do the same thing in Ethereum? Why aren't you in HBAR? Why aren't you Polygon? To me, and I really believe this, one day crypto and all these software platforms are going to be the 12th sector of the S&P. And I'm just taking the bet now that we're on our way there, and I'm taking and staking my bets now. I think Bitcoin and gold are the two assets that institutions are eyeing for a hedge against inflation. And there's so many of the institutions cannot hold Bitcoin, so they're exploring owning the equity of the miners, and they run into the ESG problem. So, and you know, one of the discussions going on these days about the ESG, if you're buying carbon credits to offset, which some are doing, some of the big public miners, who's auditing that book? In other words, is there somebody that can show to the ESG committee of an institution that there really is a true offset? The way to avoid that is what we talked about earlier, simply get a miner that is zero emissions from the beginning and that is mining and keeping the coin on their sheet, and you just own the stock. I think that's where we're going. But, you know, inflation's scary because we did something in this country over the last 26 months that's never been done before. We basically printed $3 trillion. I don't care what you want to call the program, you know, the relief program or the PPP or whatever it was. We got out the machine and we printed $3 trillion. Never been done in any country ever before. Never been done here ever before. And then we thought to ourselves, so we don't have to worry about inflation? Are you kidding? Like, look what happened. It spiked up to 7% in a matter of weeks. Of course it's going to do that. And now we have to live with that. And the idea of another $3 trillion is suicide. I mean, that's ludicrous. We can't do that. We can't. The Build Back Better is dead. I mean, you can't put that out in the market now. It would destroy the people it's trying to help. You'd have, right now we have on protein and meat, 24% inflation. I mean, it's crazy. And so that's gasoline, $5 a gallon in San Diego. Like, people are getting pissed. That's what's happening, and they're going to take it out on the polls.
Is there a world where, regardless of what the political will is, that the central banks could be talking about tapering, could be talking about raising rates, and actually back off of that, and their actions aren't as severe as the language? Or do you expect them to follow through with what they're actually saying in terms of kind of taking a tough stance against some of this stuff?
It's a great question. That's why we have volatility back in the equity markets, because there are some pundits out there talking about 6 hikes in a row and some saying 2. So somewhere between those numbers, you know, is reality. But you've also got this new pandemic, whatever you want to call this. This is kind of a different one than we had 12 months ago. But wow, there's a ton of cases. I mean, it's really sweeping through. Here in Florida, we have extraordinary numbers. They've shut down the province of Ontario and Quebec. Virtually shut it down because they've got such a raging pandemic going through there. Switzerland in the same boat. I'm just talking with my dad over there. I wanted to go and visit him. They've got over 30,000 cases a day. That's close to what it was at the height of the original pandemic. So there's issues that I think that, you know, the Fed is looking at, saying, I got to balance this against what's really going on and trying to figure out how fast does this latest round of pandemic burn itself out. I would like to think by July of this year, we're through this thing, and the economy is going to come roaring back. What I find so interesting, and this is probably a great way to look at it, in Q4, when analysts started printing, and Q4 was almost 6% GDP growth, extraordinary GDP growth, but they pulled back assumptions for Q1 down to just over 3. They basically cut it in half. I think this quarter that we're in right now, every index I've got, including private companies I'm invested in, so I see their tear sheets on sales, the economy is on fire. It's just booming. I bet you we're going to print north of 5% in this quarter. It's going to be much better than people thought. This is my own take on it. And it's going to really buoy the equity markets back up, because when you're talking 7% inflation, you do not want to be in fixed income. You want to be in something that at least keeps pace with inflation. That's equity. So I think it's going to be a pretty good quarter, but it also may mean that the Fed is hiking. But why are they hiking? They're hiking because we've got such a strong economy. And that generally does not offset the pace forward on constructive ownership of equities. The first few rate hikes generally do not destroy a bull market, and we are in a bull market.
I want to talk about, just quickly, if you can run through your general framework of how you determine where you're going to allocate capital.
I have come to the conclusion on all things digital the best way to look at it, and I've said this several times, Bitcoin is not a coin, it's software. Ethereum is not a blockchain, it's software. It's all software. HBAR, software. And so what I do is I say to myself, I've seen this movie before. I was an investor in software, engineers 22 years ago at the Learning Company when we made educational software. So the way I used to do it then is the way I'm doing it now. I'm a very lucky guy. I can make a phone call and it always gets returned. That's the whole Shark Tank thing, and I get all that. But if I want to invest in Polygon, I want to meet the engineering team, which I did in Dubai. I called them up, met them, met the team, heard their vision of what they're doing, looked at the economic reality of the outcome, the potential of it. So first is team. I want to meet the team. If I check the box on team, smart guys, good engineers, good strategy, good group, I'm interested. Here's the test, the second test. What economic value are they creating? In the case of Polygon, let's stay on that Polygon for a second. Aggregating transactions to reduce gas fees on ETH is a smart idea. There's a reason you would do that because you have an economic reason to pursue that. You save money. Transaction fees are less. So I think the potential of that is large. HBAR, okay? Great team, good engineers. What's the economic premise that would keep that growing? Well, Boeing wants a quasi-centralized, decentralized platform. They want the best of both worlds. HBAR can deliver that. Check the box there. Buy into that one too. Look what's going on with, Solana. I mean, they're trying to solve problems a different way too. Speed everything up. Check the box. Who's working on that? Sam Bankman-Fried and his team. Why wouldn't you bet that horse? So it's all about getting positions in all of these, software platforms. That's what they are. They're software platforms. So I say to institutions.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
You criticize me for investing in Bitcoin. You own a big position in Microsoft. You own a 5% weighting in Yahoo. What is that? That's software. Why don't you do the same thing in Bitcoin? Why don't you do the same thing in Ethereum? Why aren't you in HBAR? Why aren't you in Polygon? Why aren't you in Serum? Why aren't you in Helium? It's all software. And so with that attitude on, it's hard to say, I'll only invest in publicly traded software companies. One day these, to me, and I really believe this, one day crypto and all these software platforms are going to be the 12th sector of the S&P. And I'm just taking the bet now that we're on our way there, and I'm taking and staking my bets now. Broad portfolio. No one, Ethereum is my biggest position right now. Bitcoin's had a bit of a correction, I get it, but there's been volatility. But now, to offset that volatility, I own an exchange. So I want to own more exchanges. I look at it, it's all software.
And you talk about this industry being the 12th sector of the S&P. And recently, Jerome Powell said that their report on crypto and CBDCs is coming out soon. What are your thoughts on the impact that report can have? And what do you think that report will contain?
I'm encouraged by that report because it shows that they're inching forward and they're trying to do it right. My opinion about the regulator is they understand the tremendous potential of this technology, the potential of streamlined payment systems, the potential of productivity that blockchain has in smart contracts and all the case uses for it. They get it. But at the same time, they're well aware that when they rule, it will be the global standard. The Chinese aren't going to do this. No one's going to follow them. They're going to follow the SEC. They're going to follow the US regulator. So they want to get it right. The first place I would like them to get it right would be on the baseline stablecoin as a payment system. I would very, very much like to be able to transact globally, pick a coin, my preference is USDC, but pick one, regulate it, and let me as an investor, along with hundreds of millions of other investors, use it as a form of payment and stability. It would be fantastic if it was backed by the US dollar. They know that. It would just be so much more efficient and so less expensive. If I could just transact, maintain a centralized or decentralized wallet, and just be able to imagine if I could buy a Swiss stock with a stable coin instead of having to go US dollar into Swiss franc, buy the security, then back into Swiss franc, back into US dollar. You know how screwed I get doing that? How much friction there is and how much I lose? It's insane. Same with Euro stocks, same with British pounds, same with Canadian dollars. I mean, I invest in all these jurisdictions and I have to deal with that. And so it's sort of, that's where I think we want to go first. Once they rule on that, everybody will say, okay, we're moving in that direction. It'll be very constructive for the asset allocation you talked about at the beginning of the hour on institutional follow through into crypto. There's no question, you're right. There's a lot of demand. They just need the regulator on board.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.